Good evening, everyone. Welcome to our Week 17 recap here on May 4th. We're going to be taking a look back at our prior week's action, see what unfolded and how it's going to help us prepare going into the next week, as well as check out how these futures are opening up here on the Sunday Night Open. So let's get it started. Live cattle are up to start us off. June contract on the board. More all-time highs in the cattle market last week. Fat cattle balancing out over the first 4 days before getting a nice push on Friday to close us at new all-time highs. Big win for the bulls as they remain in the driver's seat, and this uptrend remains intact. If we take a look back at our intraday charts from last week, we did get a nice push higher on Monday and into Tuesday morning before settling in the next over the next 3 days in this 208 to 211 area. And then getting that nice strong rally on Friday, pushing us up to new all-time highs, falling just short of 212, and getting that close here at 211.42. Big win for the bulls. Expect them to carry this momentum into the next week as this market remains strong and have good potential for a lockout rally here. So look to see those bulls pushing up into the mid-210s and even beyond that. So fat cattle market is looking good and strong. Go down the line into these back months. We saw new all-time highs print on all of these 2025 contracts on Friday, showing nice bullish momentum. So expect them to keep grinding higher. Jump over to our feeders now. Feeders weren't quite as strong as the fats last week, but saw new all-time highs though, nonetheless. Price balancing out all week long. Here on this August contract, we did get a new all-time high printed on Friday, just briefly poking above that Tuesday high. However, we did close back inside the range. But this balance area up here at new all-time highs is showing good acceptance of these higher prices following this rally after the early breakdown in the week of the month of April. Nice rally back to new all-time highs from that. Shows this market is strong and shouldn't be worried about anything. And new all-time highs are to be expected going into the next week. We are just inches away from that $3 mark, so we'll be expecting the bulls to be making a push into those threes, into that $3 range. These back months weren't quite as strong on Friday. New all-time highs on some of these back months came in early in the week on Tuesday. But nice green positive close on Friday down the line on these back months, showing this market is strong as well. Nice balance action all week long. Expect to see a breakout of this prior week's high to carry us into a new leg higher going forward, or continued base rally from here. So be expecting the cattle market to continue grinding higher in the week ahead. Next up, we got our corn futures, July contract on the board. Last week, we did see a breakdown. 477 was our level to watch going into the week, and we broke that early on Monday with a nice, strong down day on high volume, showing the bears taking over and making those bulls fold and dash their hopes of another leg higher in a new uptrend. Here at the moment, we've been crossing back and forth across our major moving averages. This is a sign that we're moving into a more range-bound environment. We do have this overhead supply zone dating back to the end of February, keeping a cap on price following this rally, slowing price down just shy of $5 and breaking us down. Keeping this will be a new potential high of the range, as well as this 450 to 460 mark will now be the anticipated low end of the range. If we take a look back at last year's action, we did see a lot of equal highs, or a lot of highs in this 450 to 460 area that catapulted this market into a nice breakout into the $5 range and above early this year. All these prior highs are now stepping in and acting as support from above, or support from below as prices trading above it. All these signs are telling me that this market is probably going to be stuck in a range for a while. As we cross back and forth across these moving averages, expect a choppy environment. The bears do have a little bit of the upper hand going into the week ahead. as we do have that momentum and as prior weeks closes. And so far here, the Sunday night open is pushing down below our bear pivot already. So be ready for the bears to push down into the low end of this range. We'll have to wait and see how the bulls respond. If the bulls are able to buy this market up and offer support here, I wouldn't be surprised to see a push late in the week or next back into the middle of the range and potentially the top end of the range. Right now we're using about $5 to $4.50 as our big picture range we're going to be expecting price to trade around. Before we can commit to a side and stick and put any faith into a trend, we're going to need to clear and close below 450 or above 498 and just call it 5 to confirm any directional moves. In the meantime, expect the prices to keep swinging back and forth across these averages and creating a nice choppy environment going forward. Next up, we got our crude oil market. Bears saw a nice push last week lower. Price is balancing out in the middle of the month, just below this 20-day moving average, and finally getting that breakdown last week with prices pushing below 62. High of the week coming in just shy of 64. We did have a nice early push down to about 56.5. Over the first 4 days of the week, the price did pop back up and kind of settle up here in this 58-59 range to close out the week. Bears are definitely still in control, just a little bit of balance and relief rally on a lower time frame here, as we had this nice push and then just a bit of a relief rally after getting a little extended here. However, we did see this nice shelf being created on this falling profile chart showing any offers below 58 would really open the door to new lows. We did see during a low volume time overnight on the Thursday morning European Open, we saw that flush lower before getting pulled back into it. But the shelf was created showing that anywhere below 58, this market is going to move lower in a hurry, and we already saw that with this Sunday night opening gap, with the Sunday night open gapping down, and looks like the bears are going to waste no time continuing this downtrend and pushing this market lower. So far, we are just shy of that $55 low of the year. Expect the bears to have their sights set on that and potentially lower as they start aiming for $50 and with this big picture downtrend still intact. Next up, we're going to jump over to our indexes. The S&P saw a continued upside last week. Each of the indexes all saw a good upside last week, with NASDAQ being the strongest. The NASDAQ did get a push and break above this tariff day high, which was a big win for the bulls. The S&P is still chewing through that tariff day range on April 2nd. However, we did get a close back above the 200-day moving average. And in bullish territory here across these indexes, the Dow was lagging, still struggling to get their footing and see some real upside. We did get a close above the 50, but just shy of the 200-day moving average, as well as still a ways away from that tariff day range. This is an area to expect to see resistance step in, but in the meantime, the bulls still have the momentum and the wind at their back. Be looking for the S&P to start pushing into this tariff day high and nearing this 5,800 mark. This is going to be an area that we expect resistance to step in. If we are able to poke above this tariff day high as well as this prior swing high at the end of March, this is an area that we will be expecting sellers to step back in and try and trap some bulls, as we have kind of seen a bit of about a 10 or so day rally in a row here with a lot of upside in these equity markets. Lots of nice bases being built beneath the surface. Some of these large components of these indexes are setting up real nice, showing good potential for a new power trend going into the rest of quarter two. However, just going to have a little bit of this overhead supply we're going to have to chew through, and we are still prone to some shakeouts. So don't be too comfortable anywhere here at the moment. We want to make sure we can clear above this 5,800 mark and find some smoother sailing and still be seeing support from our major moving averages if prices to retest them from above. So That's definitely what we're gonna need to see to really commit to the potential power trend. But we are seeing a lot of good signs from the bulls here as they're picking up the pieces following this big breakdown we've seen so far in 2025. So, but definitely got some positive signs here and a momentum from the bulls. All right, that's all we got for this evening, everyone. Thanks for tuning in, and have a good week.